Greetings traders and welcome to Exness Talks, your go-to source for the latest analysis and ideas from markets, plus tips for trading and more. Hello traders and welcome to another analytical podcast from Exness Talks. Joining us again we have Stanislav Bernakoff. Thank you very much, Stan, for being here.
Hello everyone, thank you Michael for having me.
And something that's come back into focus among many traders over the last, well, today mainly, but over the last few days, is inflation, with new statistics from the USA indicating that inflation in food prices in particular is going up significantly. Do you think this is going to have a strong impact encouraging commodities rally? And do you think there's any other effects that continuing rise in inflation might have on markets?
Yes, so normally the main indicator of inflation is consumer price index, which is calculated based on the data from the previous month. But we have the independent research from Nielsen IQ, which shows that some grocery products, which we normally buy in the grocery stores in the US, they have risen more than 5%. So to be particular, 5.7%, it's already consumer inflation. So maybe it will be included in the next CPI. So we never know what the number would be, but that's already the inflation. And certainly that's good for commodity prices. Well, I don't say it's good for the economy, but for commodity prices, obviously that's a driving factor. So we have gold, we have metals, we have crude oil, and all other commodities which are fueled by that. But not only the regular group of investment commodities, let's say, but also grains like, for example, wheat, corn, soybeans, and other commodity futures. So I think that this trend has all reasons to continue. Well, let's see how it goes this week, because this week we have the employment data published at the end of the week, the first Friday of the month, as all you know, non-farm payrolls. That would be very indicative for the future prices of not only commodities, but also other markets as well.
Mm-hmm. Okay, and if we look at oil specifically, overall the picture is positive because of inflation, yes, and also there's lower stocks in Europe, 6-year low. But OPEC Plus's meeting coming up tomorrow, at which the cartel is expected to extend its cuts, is something that possibly could also have a positive impact on oil. Or do you think this is priced in already and it's not going to have a significant effect?
I think that the main trend for commodities, for oil, for energies is kind of quite strong. The deficit is quite strong. And well, let's see how it goes. So I don't think personally that it will affect too much the current trend because OPEC usually, so it indicates, well, they might take some action. Okay, so we don't know exactly what they're going to do. But normally, the trend is very difficult to reverse, such trend like that. So because it's based on the fundamental factors, not by the supply and demand, well, local supply and demand, let's say, in some countries, but it's driven by the fundamental issues with inflation, and commodities represent the overall fears of investment community about the inflation. And it's actually not so easy to beat by any supply and demand factors. So let's see how it goes nevertheless. So we will carefully monitor for numbers and see how they affect the current situation.
Okay, and let's look at the latest for Bitcoin. Not really very much has happened over the weekend.
Yeah, May is going to be the worst month for Bitcoin since 2011, actually. Mm-hmm. So, of course, we had some wild swings for Bitcoin before, in previous years, but May is gonna be possibly the worst, and it has been a very painful, this gut pain. All Bitcoin traders felt what it is, and well, nothing really changed over the weekend, as you mentioned. So it's continued consolidating around 34,000 level. So let's see how it goes. So I would not be surprised if it plummets below 30,000 and tries to find support below, because now, at least for now, we don't see any big buyer which steps in on the current prices and drives it up. We don't see that. Now, that doesn't mean that it will not appear in the nearest future, because we only analyze what has already happened in the chart, right? So we don't see that yet. Normally, from the auction standpoint, two-sided auction, so the buyer needs to step in from the lower prices. But let's see how it goes. Anything can change here because it's Bitcoin after all.
Mm-hmm. And finally, back onto inflation to some extent, we've seen that the Turkish lira has reached a fresh all-time low against most major currencies. It's like about 10.40 to the euro this morning. Can you briefly explain some of the factors that are going on here?
Yeah, so actually they cannot beat the inflation. The interest rate is already 15%, right? But inflation is 17%, so they actually cannot beat that. Well, so what does that mean? So actually, there is a very little chance that Turkish lira will strengthen against the American dollar. So possibly we will see this trend continuing and going on. So if you speculate on lira, so just don't forget about this fact. So when you have fundamental situations like that, it's very difficult for the currency to strengthen.
Mm-hmm. Okay. Well, thanks very much, Stan, for your valuable insights.
Thank you, and good luck and trade well.
Yes, indeed. Good luck and trade well to all of you watching and listening. Please do join us again in the near future. Thank you. Goodbye.